it's Natasha here, and my job is to help as many people as I can to negotiate the right divorce settlement. I've put together a series of case study style videos covering a variety of topics to help give you a better understanding and some clarity around different areas that come with a divorce. Whether you're a legal advisor or you're going through a divorce yourself, hopefully you'll find the information I'm about to share with you helpful. Today I'm going to look at the effect debt can have on mortgage borrowing. And the kind of debt this video can relate to includes credit cards, loans, hire purchase, catalogues or store cards. And I recently completed an assessment for a client which highlighted the effect debt can have on mortgage borrowing. And it is this report which consisted of two different financial scenarios that I will go through with you today. Firstly, the client's circumstances were as follows. They were self-employed and over the last 3 tax years had averaged income of around £30,000 per year from share of net profit. At the time of the assessment they were 42 years old, so the mortgage term used was 25 years. And finally they wanted me to assume they had a minimum 10% deposit towards the purchase of a new property. The first scenario within the assessment was based on their current circumstances as detailed, along with debt which included £10,000 of credit card debt, a loan of £6,000, a hire purchase agreement for £12,000, and they were also paying monthly child maintenance. In total, this person was paying £1,250 per month to maintain all 4 of the liabilities mentioned. Now in this scenario, most of the mortgage lenders contacted during my research would not consider this individual for lending whatsoever, deeming the outgoings too high and income insufficient to support any further borrowing. There were 1 or 2 mortgage providers who would potentially consider lending a very small amount, but with a 10% deposit available, they would not be able to buy a property whatsoever in the area they were living. However, this client had argued that the loan, and those of you with a good memory will remember was for £6,000, was for the benefit of their ex-spouse. Also, although the credit card was in their name only, the ex-spouse often used the credit card and had contributed considerably to the large amount now owed on it, and this included holidays, furniture and goods for their home. So, in the second scenario, I assume the ex-spouse would be responsible for taking on or repaying the loan and 50% of the credit card debt. And this reduced the client's total indebtedness from £28,000 down to £17,000. And monthly outgoings would reduce by £400 to a total of £850. Now in this scenario, all the lenders contacted confirmed they would consider the client for mortgage lending, which was good news. And although maximum borrowing amounts still varied, many of the lenders would consider mortgage borrowing up to £80,000. 10% deposit available, this meant the client could potentially buy a small flat or an apartment. So with the help of the report and the various scenarios considered, the client was able to show the importance of repaying their debts and that by reducing what they owe was the only way they would be in a position to secure and maintain a mortgage. Although the second scenario confirmed they could still only afford to buy a flat or an apartment, the assessment was also used to help strengthen their argument and need for a larger share of the sale proceeds from the former marital home. Having previously enjoyed a comfortable married life in a home valued at £600,000 with nearly 75% of equity, the client had a good case to support their need for a larger deposit in order to buy a more suitable property for themselves and their children to enjoy. So ensuring that you are getting the right information and exploring any potential alternatives is so important when negotiating the right divorce settlement, and the effect debt can have on capacity to mortgage should never be underestimated. That's all from me today. Thanks for listening. If you would like to purchase a mortgage capacity assessment, please download the relevant pack from our website or call me on the number showing on the screen. But that's all from me today. I'm Natasha, helping you negotiate the right divorce settlement.